Okay, I'm going to talk about why this trade is so high probability. I'm going to talk about the confluences that make this a very high probability trade. I'm not going to waste any time. We're starting with the higher time frame, and these are the executions. I took one loss short, trusted my conviction, and we covered a really nice short after that. So, first things first, this all starts on the daily chart. This started on even last week. We made the call, if you were in last week's streams, or if you're in this Monday, we talked about the weekly outlook. And I specifically said, if we inverse the daily fair value gap here, we're likely to take previous week's low. So that's what we see panning out on the higher time frame. It's just a probability thing. It's very simple. We all know how to trade inversions. If you see this inversion, is it more likely to go up or down? Obviously down. And if it's going to go down, we put in a high here. Look at the next low. Previous day's highs, previous week's lows. We already know. Very obvious. These daily lows are relatively equal. That's how I know I can trust previous week's low. Very simple narrative on the higher time frame. It's not a full reversal necessarily, but it's more likely to go down than up. So let's talk about what happens. Okay, going into the day, I was bearish. I did say at first it could be a range day because it's Tuesday, August, Jackson Hole Symposium. No news, although Trump did speak at one point. I still view that as pretty much no news. So I said it could be a range day. But then I said if it's not going to be a range day, this is what I pointed at. Previous week's low, and I also had this level marked out. Although I didn't talk about it, it was marked out in the pre-market outlook. Let's talk about what happens. London trades above midnight opening price, sets a high, and breaks down. This is your daily power of 3 model. If you trade London, you short this. I don't trade London, I'm sleeping. But this is basically what happened in London. And then come to New York Open, we're right here at this point in time. So basically, we're at this point of the daily candle. London high, obviously this is like London lunch, but this high is likely to be protected. Why? Trades into the daily inversion, and then we get the break. Where did we get the break? Right here. I always do this on the 15-minute time frame. It's not subjective. If we trade above midnight opening price into a key level and then 15-minute CISD, and I'm bearish, London high is safe for me in that narrative. So I'm already trading under the premise that we are not likely to take out this high, which is why I was leaning bearish into the trading day. You had an obvious objective here. This is previous day low. And then you had between previous day's low, previous week's low. Nothing else significant. Obviously, you can see nothing else really significant from there to there. That's why that's my next level. So let's talk about the price action. 9:30 opens, trades higher, takes out some pre-market highs, breaks aggressively. Now, at first, I thought this could be a Judas swing, so I was patient. Price retraces, you could have shorted this. A lot of people did short this. You would have had to cover, right? You would have had to cover. It's a little bit early in this session. Now, price trades up higher again. Notice, it looks like we didn't have a liquidity sweep here. But let me clean up the chart so you can see exactly what I saw at the time. And I talked about this live as well. Does it still look like we didn't take out the liquidity? Because we did. We took out the body high here, and we traded into 15-minute bearish fair value gap. That's what set the stage for this trade idea. Now, let's talk about the confluences that made this trade very high probability. 1, first presentation. 2, the minor buy side being swept. 3, closing below previous day's low. This red line is previous day's low. The fact we are below it is a good signature that we're going to run lower. Number 4, we have a huge SMT, but that's not what makes it probable. What makes it, there's an SMT like this, by the way. It's literally like, we'll just cross the whole chart with ES. What makes it probable is what we call the sick sister approach. When ES and NQ are out of sync, you have to identify which one is likely to lead if there's going to be an expansion. So ES was pumping, NASDAQ was dumping. How do we know which one is likely to sync with the other? It's very simple. It's everything I just told you. The 15-minute bearish fair value gap, closing below previous day's low, the daily chart inversion. Remember, we were already looking for shorts going into the week, so obviously it's more likely to go lower than higher. I'm going to tell you straight up, we could have been wrong and it could have pumped up higher, made a new all-time high. Yes, that's possible, but it's about probabilities. And at this point in time, when we have the daily inversion, we have London high set, we have the bearish order flow, and 930 trades higher, breaks down, retraces into a 15-minute bearish fair value gap, what's more likely, up or down? And the answer is down. I think most of you could agree. So now that we've established this, what's the actual execution? So right here, we take out the high, 15-minute bearish fair value gap. I took this trade off of the order block formation right here because there was also an SMT here. So pairing those two confluences, I think that's a high probability short. And it was uncomfortable to hold a little bit because, you know, we entered around this candle. It started retracing against us, but it was never invalid, right? We had the inversion. It got sloppy. It traded to the high of it, but the trade was never invalidated. I even said it out loud. I said, I have to be patient because I know it's sloppy, but I have to trust the narrative. And I said that verbally out loud in the live stream because I knew it was not comfortable to hold this. I'm going to be completely honest with you. We already took one loss short. Shorting again after seeing this expansion when the high days right there in morning highs right there. It's not a comfortable short. So I had to verbally say it out loud. I need to be patient and trust the narrative. If I didn't say it out loud, it would have been very hard for me to hold. Now, how did I manage this trade? Very simple. I took a partial here early on and I reduced my risk to right here. So original trade looked like this. Something like this. And then I reduce my risk. I took a partial here. I bring my stop here. So we have something like this, for example. I take another partial here. And then I leave a run or two previous week's low. Here, I terminated. I was supposed to close it on this candle. But then TradeAbit was like glitching. I was clicking partial. I clicked it 3 times. It didn't close. So the fill was at 6,110. Although we're playing with like 10 to 15 bucks at this point. So it doesn't really matter. But that's the grand scheme of things. That was the trade setup. There's a lot of opportunity to get in here. You could have got in on the first order block. You could have got in on the second order block. You could have got in on the third order block if you trade order blocks. If you trade imbalances, I specifically outlined this one because it's resting at near 50% of the range. So you could have shorted this one. You could have shorted this inversion. Maybe you're a big baller and you would have just shorted this SMT. Inversion, bearish fair value gap. Maybe you shorted the breaker here. There's so many opportunities and all of them would have played out. And you could have taken any single one of them and you would have been fine. So at no point in time should you have felt like you're missing the move up until we take previous week's low. I even outlined the setup right here. That was a 1R scalp. And if you don't take 1R, obviously you don't take this. But shorting this order block to previous week's low. It's a little bit less than 1R. I'm not going to lie. But nonetheless, depending where you put the stop, you could have scalped it. I would never take a trade like this. I'm not saying I would, but you could have. It gave you, plethora. And none of those trades would have been bad because they're all with the same narrative. At some point, and that's it. Yeah, that's the trade recap. So I'm going to go back to reading chat now, and hopefully that makes sense.